Hello everyone, myself Lavanya. I am pursuing final year BCom at Government First Grade College of Arts, Science and Commerce, Sira, Department of Commerce. Subject Investment Management. It was assigned by Thirumala M. The topic was investment in NTPC company. And why should we buy the shares of NTPC? Let's know about that. NTPC, National Thermal Power Corporation Limited. The full form of NTPC is National Thermal Power Corporation. It is an Indian public sector firm based in New Delhi. It was set up to enhance the country's power production in terms of installation and output. It is India's most prominent thermal power generating firm. Its idea is we know that India's largest integrated power company is NTPC. It is dedicated to lighting every corner of the country and building sustainable future for all. As a leader of power sector, they are committed to generating efficient and affordable power, aiming to achieve 130 gigawatt by 2033. Here we can see that it will provide reliable, affordable, and sustainable energy, supporting climate resilient future driven by innovation and agility. With it has target of achieving 130 gigawatt capacity by 2033. NTPC evolution aligns with the country's increasing focus on clean energy solution. Its portfolio has expanded beyond power generation to include consultancy services, projects management, energy trading, oil and gas exploration, and coal mining. Let's see the industry outlook of NTPC. It sells over 1952 rupees in crore. Its stock is rupees 16.2, ROC is 10.2%, market capital is rupees 3 lakh 55,432, ROE is 13.6. Let's see the income statement analysis of NTPC. NTPC Limited income statement analysis reveals a mixed performance with operating income declining year on year, but the net profit showing growth driven by significant increase in other income and slight improvement in net profit margins. Depreciation charges decreased by 4.7% and finance cost increased by 4.0% year on year, respectively. Other income declined by 35.2% year on year. Net profit for the year grew by 1.4% year on year. Net profit margin during year declined from 13% in financial year 2022 to 10.7% in financial year 2023. By the key observations of NTPC income statements, we can see here how the NTPC income statement is growing year to year. Operating income declines, operating profit margin declines, other income surge, net profit growth, net profit margin improvement, depreciation and finance cost, revenue growth, profit growth, cash flow, promoter holding. Every information are here. Here we can know what are the other services given by NTPC. Power generation. Power generation is operates various power plants including coal-based, gas-based, hydro and renewable energy sources. It produces electricity and sells it to state power utilities on wholesale basis. Focuses on operating power plants at high efficiency levels. Its availability. NTPC provides consultancy services for entire project lifecycle including owners, engineering services, project management services and contract and material procurement services. They offer expertise in various infrastructure sectors including renewable energy, thermal power plants and water management. NTPC consultant with several leading international development and financial institutions. It also provides custom solutions, project management. NTPC offers project management and supervision services for power projects, power trading. They are involved in power trading activities. E-mobility solution. NTPC is exploring and developing e-mobility solution also. Training. NTPC also provides training for the professionalist. Rural electrification. They contribute to rural electrification efforts. Ash utilization. NTPC is also focused on ash utilization and sustainable practices. Coal mining. NTPC has coal mining operations also. These are the key activities of NTPC. It will generate power, operates power plants, maintain infrastructure, research and development, environmental sustainability initiatives, implementing renewable energy projects, stakeholder engagement, regulatory compliance, performance optimization, equipment maintenance, workforce training, technology integration, project management, quality control, risk management, supply chain management, customer support services, energy trading. These are the NTPC's Limited's key activities. We can see the sales forecast, how the sales has increased by year. We can see that 2021, 22, 23, 24, 25 year 5 year sales forecast is there. It has increased year to year. We can invest with trusting NTPC because it is a developing country. If we support, it will also give more profit. It is the team of NTPC. Sri Gurudev Singh is the chairman and managing director. Sri Jaikumar Srinivasan, director finance. Sri Piyush Singh JS Thermal government nominee director. They are really hardworking for the company. NTPC's key partners. Here we can see who are the key partners of NTPC. Government of India, state electricity boards, equipment manufacturers, fuel suppliers, construction companies, technology providers, environmental agencies, financial institutions, local communities and renewable energy companies also. NTPC's revenue streams: electricity sales, power trading, renewable energy sales, consultancy services, project management services, maintenance services, equipment leasing, training programs, joint venture and partnerships, carbon credits. These are the revenue streams of NTPC Limited. Here we can see the business butter, the number of companies with the NTPC. Certification and endorsement credits, dynamic pricing, guaranteed availability, knowledge and time, energy from push to pull, low touch, make and distribute, state owned, reverse auction, supply chain, performance based contractor, solution provider. how it has in we can see the number of companies here. Let's know, why should I invest in NTPC? Why should we invest in NTPC Limited? Investing in NTPC Limited comes with several advantages, making strong candidate for both long-term and dividend investors. Why should I invest in NTPC company? Here are some key benefits. Let's see. It is stable and constant return. It means NTPC operates under a cost plus tariff model, ensuring the stable revenue. Long-term power purchase agreements with the state of distribution company provides assured cash flow. The company has history of constant profitability. We have seen in that graph also how the NTPC company has increased its sales year to year. It's not declining year to year, it has been increased. If we support NTPC with investing, it will provide us with great profit also. It has strong dividend yield. NTPC offers regular and high dividends, making it attractive for investors looking for steady income. Dividend yield is higher than many private sector companies in power sector also. Government backing it and low risk. It has low risk because NTPC is one of the central government company also. It has merged with government. They will look after with NTPC. Being a public sector undertaking, NTPC has strong government support reducing investment risk. The government often bails out of supports PSUs during economic downturns. It has growth in renewable energy. It means NTPC is diversifying into solar, wind, and green hydrogen, aligning with India's energy transition goals. The company aims for 60 gigawatt renewable energy capacity by 2033, which enhances long-term sustainability. Monopoly like market position because NTPC is largest power producer in India, giving a strong market share. It has an advantage in securing fuel supply, power contracts, and financing by the government support. Low valuation, high potential. NTPC's price to earnings is ratio is generally lower than the private competitors, meaning it may be undervalued. It makes an attractive investment for long-term value investor. If you are investing for long term, it is the best company to invest. Low valuation, high potential. NTPC price to earnings ratio is generally lower than private competitors, meaning it may be undervalued. This makes an attractive investment for long value investors. Defensive stock resilient during market volatility. Power is an essential service, meaning NTPC's business remains stable during economic slowdowns. The stock is less volatile compared to other sectors like banking or IT because power is more important for daily household works. For leading a company, also we need power. It is a basic things. If anything fails at lower situation, lower economic slowdowns, also the power is compulsory. So we can invest in that company. Capacity expansion is for future growth. NTPC is rapidly expanding the new thermal, hydro, and nuclear power plants. Recent expansion into battery storage and hydrogen projects ensuring long-term sustainability. Strategic partnership and global expansions. NTPC is collaborating with foreign companies for energy products, opening global opportunities. It has partnership in Africa and Middle East for power generation projects. Potential risks to consider. Coal dependency. NTPC still relies heavily on coal with faces environmental regulation, regulatory risk. NTPC's government policies in power pricing and carbon emission can impact the growth. High debt. Due to expansion plans, NTPC carries significant debt. However, its cash flow are strong enough to manage that. The potential risk to consider is we can easily trust the company with it has minimal risk. Conclusion, we can see, should you invest? Yes, if you are looking for stable returns with low risk, regular dividend income, explore to India's power sector and renewable growth, government backed security, you should invest, we can say. Thank you.